Hi, everyone. Welcome to the webinar, How Credit Unions Can Partner with FinTech to Engage Gen Z Members. My name is Sam Plester. I'm the founder and CEO of Mission Brands Consulting. And today I'm joined by Reagan Bunley, the founder and CEO of Nudge Money. And in a slight change to the promotional materials leading up to today's webinar, we are thrilled to welcome Brian Alvarez Bailey, who's the CEO of Allison. We had some scheduling conflicts, but thank you, Brian, so much for being willing and jumping in and helping us out today. So I want to just level set the stage really quickly. So I feel like it wasn't too long ago that every credit union in the nation was focused on that millennial market, ensuring that everything that we were doing was going to attract and engage millennials. And now all of a sudden, there's this brand new generational cohort coming into the workforce, coming into financial maturity. Gen Z are bringing $360 billion worth of spending power with them. And they're also the most diverse generational cohort we've seen in this nation today. Culturally, ethnically, racially, in terms of gender and sexuality, this is not the member of yesteryear. This is absolutely the member of tomorrow. So there's this incredible opportunity for credit unions to partner and grow and thrive with Gen Z. But right now, there's only around 4% of Gen Z who are credit union members. So I want to start the conversation off right there, Reagan, and maybe push that to you and say, why are credit unions struggling to memberize this cohort already?
That's a great question. So happy to answer that. And I'll share how Nudge looks at Gen Z. And for those of you that don't know Nudge, we are a financial wellness data engine and virtual money coach that's designed to deliver hyper-personalized financial guidance to your members through your existing marketing channels and digital interfaces. So we look at Gen Z in two segments. First is younger Gen Z, that's 11 to 18 years old. And then you have Zillennials, so that's 19 to 30-ish years old. It's older Gen Z bleeding into millennials. So in preparing for this conversation, I really wanted to dig in. Obviously, I read the research papers and articles, attended conferences, highly recommend the Underground, by the way, great conversation about Gen Z there. And I talked to a lot of Gen Zers and then ended up spending long nights and weekends online talking to and surveying about 150 Gen Zers. And what I found was pretty interesting. Obviously a small group, but I found that 70+% didn't even understand credit unions when asking questions like, why don't you bank at a credit union? What chose you to pick your first account at a bank? They would ask me, what is a credit union? And then I found that more than half of them were guided to their first institution and checking account by their parents. So for younger Gen Z, begs questions like, are we engaging them at the right time? Are we engaging them through their parents? One thing that Nudge does is all the way from the age of 4, we provide financial literacy, financial education content to parents to engage their children from 4 and up. So that way, by the time they get their first checking account, they're not going to the bank down the street. Then we think about younger Gen Z is now transitioning into Zillennials at the age of about 18 currently. Those are first-time freshmen in college. So I reached out to our friends at Arbol, their financial wellness application for colleges to engage your students. They say 66% of first-time freshmen have a checking account. So still an opportunity to engage them. One thing that's interesting, this actually hits on one of the questions in the queue, is that they had a spike in data in their data set showing that there was a lot of students using Venmo as their primary checking account. So, obviously with the proliferation of neobanks and digital banks, that's something to consider there. Now we get into Zillennials. So now this is, let's call it freshmen in college all the way up to, let's say 30. And we look at that. It's a more complex problem, but they're asking for 3 main things. And Financial Brand put this to life recently. They said that over 80% of Zillennials in these 3 categories are asking for this. How much to save to meet their goals. They want to know this from their institution. What type of insurance and how much insurance to have. And then how to maximize their retirement savings, including their 401k. So thinking about how you can deliver that, it's multifaceted. How far have we come from a digital innovation standpoint? What's our level of personalization and the data behind that? And then is our mission and brand aligned to show that you can answer those questions as an institution? And I hope that, we get to a place where all of those things come together, and then we can express the value to Gen Z, because I really believe that, the value of credit unions is special, and they could ultimately be the champions for their cohort and next generations as well.
Yeah, Reagan, you mentioned there as well the Q&A. My apologies, I should have said that out at the start. There is a Q&A live right now. Please submit your questions. We've already had some come through, and if we have time at the end, I'll make sure that we address them. But Brian, I want to pick up on something that Reagan just mentioned. He spoke about credit unions understanding personalization and being sure that they have the data behind that. And data infrastructure, data management, that's such a boogeyman for so many credit unions. And is that an opportunity for FinTech to really kickstart and amplify their program to reach and engage these new potential members?
Absolutely. And look, I want to sort of tie a straight line between both the idea of diversity, right? Sam bringing up the idea of diversity. We talk racially, ethnically, sort of ages. What we don't talk about is diversity in consumption habits, right? And we see this with the streaming of media online. We see this with the acquisition of physical goods. That has fundamentally changed. So we're not just talking about age or culture. We're talking about actual mechanisms by which people engage with things that they like. Going to Reagan's point, if the connective tissue for getting into a credit union is familial, right? Parents, ultimately that tells us that there's a level of sort of gateway. I won't say gateway of trust, but I'll say that there's a threshold of trust, right? I trust mom and dad. Mom and dad suggest that I go into a credit union, but my friends are the ones that go out and get Venmo. They're the ones that go out and get these FinTech tools. And so there's a gate, there is a, I would say, a lower bar to clear at that point, right? Because these cultural groups are more attached to the idea of I want to be like Bob, I want to be like Jane, right? To tie it all together, I think the sort of the boogeyman aspect of data piles in when you say, okay, we have a group of younger folks that don't necessarily have the fears of generations prior in terms of their information, right? They're not getting mailers in their snail mail and then going and filling out a card and sending it back and then having a $10,000 credit card bill, right? They're not doing they're not engaging in that way, but it is very much more of a danger to have sort of direct access to one's finances in the way that you would have with Venmo. And so I think what can happen, and I think there are a lot of FinTech organizations sort of leading the charge in this. We think of Sardine, we think of a few other companies, but the idea is if we start at the point of origin, right, the individual, and we put buttresses around the individual to say, hey, we want to keep you protected, but we also want to make sure that the people you're engaging with are also protected. So it's almost like a handshake of trust. I trust him, he trusts me, we trust each other. Now we can freely engage in commerce because we have some sort of apparatus that sits around our engagements. Traditional, FIs and credit unions don't have the capabilities functionally to do that. And so they need to be able to be in a position to work with FinTech companies that at the very least have the risk tolerance to be able to create those buttresses. And then you tie it all together where then they say, okay, great, we're going to engage with you so that you're the technological arm of this. I'm still the financial institution that sort of handles the legal piece of it, but I'm entrusting the distribution of that information to you and the protection of that information to you, right?
Yeah. So I was thinking this as Reagan spoke and then you spoke. Reagan, you spoke about that kind of familial connection, and then Brian, you spoke about they just don't have the fears of previous generations, and it requires a new playbook. It requires a new way, not only of doing business and operating, but also of outreach. And so, Reagan, maybe coming back to you, how can FinTech help credit unions move past that traditional playbook? How can they really plug in and catalyze that innovation?
So FinTechs, they help credit unions in various different forms, obviously. So I'll share my macro perspective of this, and it actually mirrors my takeaways from Money 2020. We're seeing a concerted effort to getting back to wealth building, wealth management tools. Considering Gen Z and millennials have an astronomical amount of debt compared to previous generations, there's a focus towards simplifying financial planning. And I know financial planning feels very heavy for a lot of people that I talk to. It sounds like getting a mortgage. This is where I spent, the bulk of my career in finance. But at its core, it's, what can I do today to improve my well-being and ultimately achieve my goals? And we believe that can be the evolution of personalization, connecting to members through simple communications that provide subtle recommendations. So Gen Z is craving this. They're looking for that level of personalization. Even institutions, credit unions, and banks as well. Financial Brand did a survey of 150 institutions. 84% said that personalized, proactive guidance is a top priority. Yet less than 20% said that they're doing a good job of it at all. And most, I think it was 3/4, said that they generally lack the confidence in the institution's ability to deliver that guidance. So obviously they're seeing the success from their peers, but I believe there's an additional layer in the next step towards personalization. The success from their peers is in the conversion of marketing. So you personalize, and then you improve your marketing, you grow and retain your members. Amex, 3x higher increase in conversion through personalization. Credit Union of Texas, 300% increase in mortgage applications. There's a large bank in Europe that McKinsey studied that had a 9x increase in conversion. So obviously a big opportunity. And when we talk to a lot of credit unions, they're still doing spray and pray marketing. They get the same message, same product out to everybody at the same time. In fact, we have someone on our team that gets what he calls the kitchen sink newsletter from his credit union. He has to scroll through every product under the sun and see if there's something relevant there. So take that legwork workout, especially for your Gen Zers and also for other generations. So my advice, if there's any to give, is that first of all, look at your financial wellness content. If you have some in-house, great. If you have a financial wellness partner, great. Feel free to reach out to us. We're happy to provide some for your membership complimentary. Is it touching on their burning pains? I mentioned the top pains that they're looking for: insurance, building up their retirement savings and saving up for their goals, but also debt pay down, emergency funds, so many other things. And then look at your marketing copy. If you're a marketer on the call, you're naturally looking at this. But if you're in lending, sit down with your marketing team. Is it providing a level of guidance? Can the member understand what a 1% savings on that auto loan really means? Does it, in some way tie to their goals? So, if there's an opportunity, combine these two. And I think that's where you'll get more of an impact. And we certainly see this, as our team, behavioral scientists and marketers, we write this copy for credit unions. We see the engagement, we see, how that converts to more opportunities. And that's exactly what we do, is we, at our core, identify the most comprehensive list of ways to engage your members based on financial wellness. So just to put it in simple terms, this is the last thing I'll say on this is, the previous institutions that saw the spike in conversion, they graduated from saying things like, try this 0% introductory offer, to here's how you can make the holidays stress-free. Where we believe innovation is, and the evolution of personalization is, here's how to make the holidays stress-free and achieve your goal of buying a home 1 year earlier by refinancing your auto loan, saving $8,000 of interest over the next few years. So we believe that connecting to the goals, providing that level of clarity, will ultimately be the evolution of personalization and the way to win the hearts and minds of your Gen Zers.
Yeah, I mean, that's what Mission Brands Consulting we speak to our credit union and system partners about this all day long. When you've focused on the commoditization of services in the financial services industry, that's not it's not necessarily a level playing field for starters, certainly not for smaller credit unions. And it's also it's not innovative. It's not intentional or personalized. Commoditization of services is not going to win you brand equity, brand affinity, loyalty, and those sticky relationships. It's about understanding those individualized, personalized needs and articulating your value, right? Your true differentiator. Having a savings account is not a true differentiator, but having the capacity and the aptitude and the genuine strategic and philosophical ambition and objective to meet Reagan and to meet Brian and understand your needs and provide you with predictive, anticipatory services to get you where you need to go. That's a differentiator. Absolutely. Talk to me a little bit about the price of entry here. Maybe, Brian, I'll speak to you about this because I know this morning you've already had a number of conversations with large national global organizations about this. I was listening to a Lendkey podcast the other day, and I think it was Matt Harris from Bain who said, there's really should be no such thing as FinTech anymore, right? Or a credit union using FinTech. It's like saying that there was digital media and then there was media, and now it's just media. Digitization of it has really kind of gone out the window. Financial institutions have digitized. There isn't a financial institution out there that isn't integrating some type of FinTech. So what are the barriers to entry or the prices of entry for smaller, more agile, more nimble, more exciting organizations like Allison right now? What are you hearing? So then maybe on that, what's your counterpoint, right? What's your value?
Right. Yeah, and look, if we set the premise as FinTech being the functions and tasks of automating and being as proactive as we can at this set of banking goals / outcomes and quote unquote banking or traditional finance being how we've done things for 150 plus years, right? Like that's really what we're talking about. So I use the term antibodies a lot because in this scenario, antibodies represent the reluctance to stop doing things the way we've always done them because they're comfortable, right? Like human beings just in general are creatures of comfort, right? It's in every aspect of our lives, especially when we start talking about our money. And especially when we're talking about financial institutions that are entrusted to protect our money, right? So then in their mind, the risk profile goes here. So that's why you have companies that have built software that are considered FinTech because they then are decoupling themselves from the risk. Where I would counter that, though, is I don't believe that FinTech companies are any less risk conscious than traditional finance, such as credit unions. I think what it is they're saying, hey, there's an opportunity here if we can mitigate certain and constrain certain potholes. We feel that we can see a return on this investment that will then lead to a larger adoptive sort of posture. And that then opens the pool so that credit unions can come in and feel more comfortable about adopting this technology. But I just want to go back a little bit and just talk and just kind of tie this thread into the idea of intention and personalization. So you have an institution that if you've been banking with them long enough, they know in aggregate kind of what you spend your money on. What things are you interested in? So there are opportunities to be intentional about not only putting things in front of me that match my long-term goals, but also educating me on opportunities that I didn't even know I wanted. I can go back. Look, I'm old, right? So I'm not of this generation. But if I were to go back 25 years when I was in college, like I had no aspirations about buying a house. I had no aspirations about putting money away. I thought I was invincible. Of course, life trained me that that's not the case. And so, but I mean, just imagine if 25 years ago, I was being proactively and intentionally spoken to by my institution on what my options were. Like here's a snapshot of Brian in a year. Here's a snapshot of Brian in 5 years. Here's a snapshot of Brian in 10 years. And my financial institution was the leader in terms of laying out that pathway for me. Now it's like, oh man, yeah, I want that. Like, what? How do I give you more money so I can get this? Right. And so now I've already bought into the idea that this organization is trying to push my financial health forward. So now I'm completely bought into whatever tech they want me to use. You want me to download a mobile app? Great. You want me to go online and do this? Great. No problem. You want me to authenticate with this phone mechanism? No problem. Right. And so the quote unquote pushback that I would offer to those that want to demarcate quote unquote traditional finance and fintech is say, all we're talking about is removing the gatekeepers at those institutions that are fearful that if we do thing X, it's going to make their jobs obsolete. It's never going to, like, we're never going to be in a situation where FIs go away. Like, let's calm down. That's never going to happen. But the sooner FIs become more collaborative and more sort of engaged with the idea that this is a tool, just like any other tool in my toolbox, but it's still our toolbox, they then start to take more ownership of it. And so I think that will then spread out. But it's like everything else, like you have to do it in steps, right?
Hey, Brian, I got a question for you. You guys are obviously looked at as the missing link between the FinTechs and the institution. And, kind of back to Sam's question of the barriers to entry, what can credit unions do today to reduce that barrier to entry and reduce that friction between the credit union and the FinTech? And how does Allison help with that?
No, that's a great question. So philosophically and from an application standpoint, Allison takes a sort of source of truth position, in that we attempt to we used the word simplify earlier. We attempt to simplify the relationship between the individual, their credit union, and the credit union in any of their relationships, right? We try to simplify them to the sort of first principles, right? So ultimately, I as an individual, Allison is making sure that I've done everything that I need to do to stay a quote unquote good actor, right? Haven't committed any financial crimes, haven't been associated with anything that's adverse in terms of sort of anti-financial health, right? And so once we've established that level of trust, we then create a digital stamp that then follows that individual around. So as I do more good things, the FIs that I sign up with can then leverage that information so that they can give me potential mortgage loans. They can give me potential financial vehicles that can even improve. Going back to my point about if I knew then 25 years ago where I wanted to be now, I would have done the right things. So Allison tries to proactively encapsulate that good behavior so that the financial institution that I'm working with can then offer me services to even make that better. Conversely, we make sure that people that are doing bad things stay completely out of that sandbox, right? So, all the things like anti-money laundering, adverse media checks, sanctions list violations. We do all of that stuff in spades. But one of the major things that we do is we try to connect the publicly accessible information of anything that you do financially back to that FI so that they then know, hey, this is the type of customer that I'm signing up. They're connected to some things that I do not want my institution to be involved in. I do not want to take this money. Do not pass go. Do not collect $200. And that's what our software does automatically, right? Ultimately, we want to put the power in the hand of the FI to say, yes, I do want to work with this customer. No, I do not want to work with that customer. And we want to do it programmatically so that there's not a physical human being that has to be the arbiter of that each and every time. There can be a physical human being that does a true up or a check or almost a high level sort of curation, but we want to put all the tools in their hands and all the data in their hands to be able to do it at their leisure, right? Almost like a checklist, right? Where you go through the process of making sure that these are the type of customers that we're signing up. And then the other part of that is that there are FIs that want to get into deeper deposits, that want non-interest deposits, that want non-traditional deposits, but they don't have the toolkit to be able to do that. And so Allison acts as almost an aggregate hub for quote unquote FinTech services that are out there that FIs may want to offer to their customers. And now the FI doesn't have to worry about, well, how do I connect to this? How do I make sure the reporting is right here? I have to report this back to my regulator. How do we do that? Allison does all that by streaming the integration. And so now this is one thing that the FI never has to worry about. They never have to worry about, can we see what's happening transactionally? No, you see that. Do we have to worry about, hiring developers to be able to let this FinTech company work with us? No, you don't have to do that. We integrate directly into your existing core. So you don't have to change a thing about how you do business. The only thing you have to do is now be in a position to accept these new deposits and then say whether or not you want to keep those new deposits, right? Like that's really the only added step to it. But fundamentally, I say it's a mental thing. It's not a technology thing, right? It's we've never done this before. Well, hey, there's a lot of things we never did, right? Before we learned how to walk, we didn't walk, right? The hardest thing a human being will ever have to do in their life is learn to walk. Once you've cleared that bar, everything else is nirvana. So
I scribbled about 20 notes on what you just said then, and I'm conscious of time, but one of the things that really excited me is when you spoke about that digital stamp. And Reagan, when I go back to what you were saying earlier, where Nudge is in a position where you're providing these kind of interventions and these proactive steps at an age as young as 4, because Brian, you started out by talking about if you've been banking with someone long enough, but the very oldest Gen Z right now is in their early to mid 20s. Half of the generational cohort haven't even graduated high school yet, so they don't have that longitudinal relationship. But when you've got a partner who can provide that digital stamp, and you've got a partner who has been engaging them in financial conversations from the age of as young as 4, where my head goes is Mission Brands Consulting has a few credit union clients that have higher education as a seg, and 201, they see this graduate attrition, right? People graduate, and then they spend a few years figuring out how to adult, and then they no longer use that credit union as an FI. And I wonder whether this kind of early engagement is potentially a cure to that ill, right? That this right now is a living and breathing opportunity for credit unions to create that stickiness where you can form a longer lasting relationship with members, past their I was at college and therefore I used my higher education credit union. But I also want to mention, Brian, you used the word toolbox. You said, we can be another tool in a toolbox. And Reagan, you and I were talking about this the other day. There's something like, depending on who you listen to, there's 10,000 FinTech, there's 15,000 FinTech. Either way, there's a significantly higher margin of FinTech than there are credit unions right now. So how can credit unions, is what we're seeing is an emerging market of FinTech that are really just looking at making money by and through credit unions? Or is there genuinely this opportunity for mission alignment and strategic partnership? And actually, that was one of the questions asked ahead of time as well, is how can credit unions truly partner and not just run parallel with FinTech?
It's a great question, an important question, because I think the relationship between FIs, credit unions, and FinTechs will likely change here over the next couple of years, several years. I hope it does. I'd echo what I heard from Brian Cass at TrueStage in an article. He mentioned that what makes credit unions attractive to a lot of FinTechs is that they notice the large loyal membership, and oftentimes a FinTech has great technology, they just don't have the market share or the trust in the financial services space. So if you put powerful technology and credit unions together, it makes something great. But then you peel back the layer of those call it 8,000, 10,000 FinTechs, then you have a good segment that are in it for the money and the others that are truly mission aligned. And I think, that should be a barrier of entry. Why not focus on mission alignment? I mean, for us, it's definitely mission alignment. I grew up helping underprivileged individuals in India, really spending a lot of time helping out in various different nonprofits, then found my way into banking. So I knew the best way I can help was through delivering financial wellness. I saw the power of what that really makes at scale. So Obviously something that Nudge and our team is passionate about. So if I have any advice around this, I'd say just ask your FinTech vendors, what is your mission? Why are you doing what you're doing? And why do you see yourself as a true partner? And, hopefully that will give you some insight as to, what their motivations and, are they really going to be a true partner? If they can't articulate that easily, maybe that, maybe they haven't really thought about mission and, maybe it's something really else, but that's just my perspective on it.
Yeah, well, gentlemen, we're at time. That conversation has flown by, and I want to be conscious of everyone who's tuned in and is watching this. What I can say is questions have come in. We will ensure that a recording of this goes out to you all, and we'll also answer those questions and make sure you get all of that as well. Reagan, Brian, thank you so much for the conversation. I think that's been informative. I've learned things. I think the key takeaway is this really is opportunity, right? There's 4% of Gen Z that are members, but what that means is there's 96% of headroom, and there's an ecosystem of FinTech that are just ready to simplify and streamline that growth. So thank you everyone for registering and watching. We'll send the updates and answer the questions, and please reach out to any of us for further information.
Thank you all.
Thanks, guys.